Someone asked me recently whether I was angry at Claire. I thought about it genuinely before I answered. I said I was, for a while. But anger is expensive, and I have a fixed budget for expensive things. What I feel now is mostly clarity. I know exactly who she is. I know exactly what the marriage was. I know exactly what I am worth in the specific sense of what someone who knew me completely decided I was worth leaving properly, and what that calculation says about her and not about me. And I know that on a Saturday morning, when a letter from the IRS arrived and I could have crumbled or hidden or found a way to make it not be what it was, I call my brother, I found a good lawyer, I let the work be done, and I let the results speak. They spoke. If this hit you somewhere real, leave a comment. Have you ever discovered that someone you shared your life with had been living an entirely different one in parallel? How did you find out? How did you come back from it? I want to hear from you. This is Reddit Confessions. Subscribe. A new story drops every single week, and we never run out. I want to tell you where I am now. Honestly, completely, without the performance of doing better than I am. I am 40 years old. I still teach history at the same high school. I still coach youth basketball on weekends. I still know every neighbor on my street by name. Though, it was a different street now. I sold the house as part of the settlement and bought a smaller one a few miles away that is exactly the right size for one person, and that I have been slowly, methodically making into something that feels like mine. The $412,000 from the settlement is invested conservatively and growing. I do not think about it very often. It is not what I spend my mental energy on. What I spend my mental energy on is the 8 boys on my basketball team, 2 of whom are good enough that I have started reaching out to high school coaches on their behalf. I spend it on the 11th grade class. I am currently teaching about the causes of the First World War, which is a subject that rewards patience and long-term thinking in ways I find newly relevant. I spend it on the slow business of rebuilding trust in myself, which is different from and harder than rebuilding trust in other people. The OIG inquiry concluded 14 months after Patricia filed the initial disclosure. Claire received a formal finding of a compliance violation related to the overlapping billing. The finding resulted in a substantial financial penalty, a mandatory compliance training requirement, a 3-year monitoring agreement, and a notation in the Federal Healthcare Provider Exclusion Database that affected her ability to bill Medicare and Medicaid through any practice she worked with professionally. Her hospital administration employer became aware of the OIG finding through the exclusion database notification. She resigned from that position 4 months after the finding was issued. I do not know what she is doing professionally now. I have not looked. The negotiation took 6 weeks. Claire's position weakened as the full picture of what Sandra had documented became clear to her team, and the OIG inquiry, which had expanded from preliminary to active during the negotiation period, added a pressure to the timeline that Hendricks had not anticipated and could not neutralize. The final settlement gave me equitable distribution of all marital assets, including the hidden ones. My share of the total asset pool came to $412,000. Paid in a combination of cash for the transition fund and investment account liquidation, and a structured buyout of my interest in the condominium. Claire assumed sole responsibility for the IRS deficiency, all $94,000 plus interest, which was incorporated into the settlement agreement as a binding financial obligation enforceable as a civil judgment if defaulted on. The settlement also included a clause that Claire provide full cooperation with the OIG inquiry. She signed it. I sat in Patricia's office on the day the settlement was executed, and she said, "You handled this well from the beginning. Most people in your position make at least one move out of anger that costs them. You did not make that move." I said, "I had a good father. He taught me that the results speak if you let them." She said, "They spoke very clearly here." Hendricks called Patricia 40 minutes after receiving the disclosure. Hendricks said, "Patricia, we need to talk about the scope of what you have filed." Patricia said, "I assumed you would feel that way. What would you like to discuss?" Hendricks said, "My client was not aware that the extent of the documentation you have was," she paused, "this comprehensive." Patricia said, "I see. Is your client interested in moving toward resolution?" A pause. Then, yes. "She is." Patricia said, "Good." My client's position is equitable distribution of all marital assets, including those held in separate accounts and in the LLC. Full contribution from your client for the IRS deficiency plus interest. Buyout of the condominium at current appraised value, with proceeds split equitably, in a settlement structure that does not require extended litigation. We are not seeking punitive measures beyond equitable distribution. We want resolution. Hendricks said, I will speak with my client. She called back the following morning. Claire had retained a divorce attorney of her own, a woman named Hendricks who had a reputation for aggressive negotiation and who had apparently advised Claire that her separately held assets were likely to be treated as her separate property. The opening position from Claire's side was structured as though she expected to walk away from the marriage with most of what she had hidden. Patricia received Hendricks's opening position and called me to describe it. Then she said, they do not know about Sandra's report yet. They do not know about the OIG disclosure. They believe their position is strong because they believe we do not have full visibility into the assets. They're about to be corrected on all 3 points simultaneously. I said, how? She said, we file our asset disclosure this week. It will include Sandra's full report as an exhibit. Every account, every property, every valuation. All of it. We serve it to Hendricks's office on the same day we inform them of the OIG inquiry. I said, same day. She said, same hour if I can manage it. She managed it. I read that section of Sandra's report twice. Then I called Patricia and said, what does the healthcare billing piece mean? Patricia was quiet for a moment. Then she said, it means we have a conversation to have about whether to keep this civil or to make it significantly more complicated for her. I want to think through that with you carefully. I said, let us think through it. The healthcare billing overlap, she said, was potentially a violation of the anti-kickback statute and potentially the False Claims Act if any of the billing had involved Medicare or Medicaid patients at the practices in question. Sandra had identified that at least one of the 2 practices billed Medicare. The amounts involved were not enormous. Sandra estimated approximately $40,000 in potentially problematic billings over 3 years. But the regulatory framework in that space was strict, and the consequences of a complaint to the relevant oversight body were serious regardless of the dollar amount. Patricia said, I am not recommending we use it as a weapon. What I am recommending is that we disclose it to the relevant authority because it is the right thing to do and because, separately, it will affect her position in these proceedings significantly. I said, file the disclosure. Patricia filed it with the Office of Inspector General the following week. Sandra Okafor spent 10 days going through everything. Her report was 71 pages. Sandra had found things that Marcus and I had not found. There was a 3rd bank account opened 6 years ago that held the early revenue from the business before the separate savings and investment accounts had been established. That account had been largely drawn down, but still held $11,000. The condominium had a mortgage. The mortgage payments had been made from the business account for 4 years. The equity in the property, net of the remaining mortgage balance, was $206,000. And Sandra had found evidence that 2 of Claire's business clients were medical practices, where Claire also held an administrative role through her hospital employment. She had been billing those practices through her consultancy for services that overlapped with her employed role. Sandra flagged this and noted that it potentially implicated Claire's employment contract and, depending on the nature of the billing, potentially raised issues under healthcare billing regulations. Federal ones. I said, what about the IRS issue? She said, the tax deficiency is a joint liability on a joint return. You are exposed on that regardless of who earned the income. But we can address that as part of the divorce proceedings and seek contribution from her for the full amount, since the liability arose entirely from her undisclosed income. That argument is strong. I said, what about the condominium? She paused. Then she said, tell me again about the condominium. I told her again. She made a note. Then she said, I'm going to need a forensic accountant on this. I have someone excellent. Her name is Sandra Okafor. Can I bring her in? I said yes. She said one more thing. When you go home tonight, if Claire is there, you say nothing about any of this. You are civil. You are normal. You do not let her know the scope of what you know. Can you do that? I said, I am a history teacher. I have been managing a room full of teenagers who think they are smarter than me for 9 years. I can manage one evening." Patricia almost smiled. She said, "Good. I will call you tomorrow." Monday morning, I called Patricia Shun. She had been passed to me by a friend of Marcus's who had dealt with a contentious business dissolution 2 years earlier. I had never needed her until now. I called her at 8 in the morning. I was sitting in my car in the school parking lot because I'd come to work out of habit and then realized I could not go inside. Not that day, not with any of this still raw and unprocessed. Patricia took the call. I told her everything in 12 minutes. She asked 4 questions. Then she said, "I need you to do nothing today. No conversations with Claire about finances, no accessing joint accounts, no contacting her family or yours. Can you do that?" I said, "Yes." She said, "Come in at 3 this afternoon. Bring everything Marcus pulled over the weekend." She was ready for me at 3. We sat for 2 hours. At the end of it, she said, "In our state, assets accumulated during a marriage are generally marital property regardless of whose name they are in. That means the business revenue, the investment account, the transition fund, and the condominium are all potentially subject to equitable distribution." She hid them. That hiding does not make them hers alone. It makes her position in the divorce significantly worse. There was a second property, a condominium in a city 3 hours away, purchased 4 years ago, held in the name of her LLC. Current estimated value based on public records was $280,000. Claire had, while married to me, accumulated assets in her own name totaling approximately $658,000. None of it had been disclosed to me at any point. None of it appeared on any joint financial document. And because I had trusted her to manage our financial life, because that had been the division of labor in our marriage, her structure and my trust, I had never looked closely enough to see it. Marcus sat back in his chair at the end of Sunday and said, "Daniel, you need a lawyer tomorrow morning." "Not this week. Tomorrow." I said, "I know." He said, "A divorce lawyer and a tax attorney." "Both." I said, "I know." He said, "You're going to be all right." I said, "I know that too." I was not entirely sure I believed it yet, but I said it. Marcus and I spent that Saturday night and all of Sunday going through everything we could access. Bank statements, tax returns, public business registration records, property records. Marcus pulled documents I would not have known existed and asked questions I would not have known to ask. By Sunday evening, we had a picture. Claire's business had generated, over 6 years, approximately $1.4 million in gross revenue. After business expenses, the net was somewhere in the range of $900,000. Of that, the IRS was now aware of the unreported portion, and the deficiency notice covered 4 of the 6 years. The earlier 2 years had fallen outside the standard audit window. The transition fund held $218,000 in a high-yield savings account in her name only. There was an investment account in her name only with a current value of approximately $160,000. I want to tell you what those 4 hours felt like because I think it is important to be honest about it. I did not feel angry, not primarily. I felt something closer to vertigo. The specific disorientation of discovering that the ground you thought you were standing on was not where you thought it was. 9 years of a life, a house, a marriage, plans for children we had not yet had. All of it viewed through a new lens that changed the shape of everything. I cried at some point. I am not embarrassed to say that. I sat at my own kitchen table and I cried for probably 20 minutes, and then I stopped and I got up and I washed my face and I thought, what do I do now? And the answer that came to me, with a clarity that surprised me, was you find out everything. All of it. Every number, every account, every decision. You find out the complete picture before you do anything else, because you cannot make good decisions in the dark. I picked up my phone and I called my older brother Marcus, who was a CPA and who I had not yet spoken to about any of this. I said, "Marcus, I need your help. Something has happened, and I need someone who understands numbers to sit with me tonight." He was at my house in 40 minutes. Some of it, I discovered later, had been moved to a separate savings account that she had been building for what her financial planner, a financial planner I had not known existed, had apparently described in their written communications as a transition fund. A transition fund. She had been planning to leave. Not immediately, not necessarily, but the infrastructure of departure had been constructed and maintained throughout our marriage. The separate business, the separate accounts, the separate financial advisor, the transition fund. I had been living inside a marriage that had an exit strategy built into its foundation from the beginning. I sat at my kitchen table after those 45 minutes and I said, "How much is in the transition fund?" She said, "Daniel, that is not relevant to the IRS issue." I said, "Claire, how much is in the transition fund?" A pause. Then, $218,000. I looked at her for a long time. Then I said, "I need you to leave the house for the rest of today." She left. I sat at the kitchen table for 4 hours and did not move. Claire had been running a side business for 6 years. Not a small one. She had used her hospital administration background and her professional network to build a medical billing consultancy that she operated entirely outside of our shared financial life. She had a separate business bank account, a registered LLC in her name only, a client list of 7 small medical practices, and an annual revenue that in the most recent year had reached $340,000. $340,000. She had been earning that for 6 years. Not at that level from the beginning, but growing every year. And she had filed our joint tax returns each year, using only my teacher's salary and her hospital administration salary as reported income. The business income had been kept in the separate account. Some of it she had invested. Some of it she had spent on things she had told me were covered by her salary. A car upgrade, trips to visit her sister, home furnishings she had said were on sale. I stood in my kitchen in my weekend clothes holding that letter, and I thought, there has been a mistake. Because I was a high school history teacher, I did not have unreported income. I had extremely reported income, and it was not a figure that had ever made anyone nervous. I called Claire into the kitchen. I handed her the letter. She read it. Her face did something I had never seen it do before in 9 years of knowing her. It went very still in a specific way. Not the stillness of shock, but the stillness of someone who has been waiting for a particular thing to arrive and has now watched it arrive. I said, "Claire, what is this?" She said, "I can explain." I said, "Please do." What followed was 45 minutes that rearranged the entire architecture of everything I believed about my marriage and my life. We bought a house in year 3 of the marriage. A 3-bedroom on a quiet street. More house than we needed at the time, but sized correctly, Claire said, for the family she planned to have. I agreed because I wanted that family too, and because Claire's plans had a way of being correct. What I did not know, what I had no mechanism for knowing at the time, was that Claire had a parallel financial life that she had been running since before we got married, and that she had continued to run with increasing sophistication throughout our marriage. I found out about it on a Saturday morning when a letter arrived from the IRS. The letter was formal and densely worded, and I read it 3 times before I understood what it was telling me. It was a notice of tax deficiency for a joint return filed 4 years earlier. The IRS had identified unreported income associated with our jointly filed return. The deficiency amount, including interest and penalties, was $94,000. $94,000. Let me take you back to the beginning, because the beginning is where you need to start to understand how someone like me ends up where I ended up. I met Claire when I was 29. She was 27, worked in hospital administration, had a laugh that filled a room, and an organizational precision that I found both impressive and slightly intimidating. I was a man who graded papers on the couch with the television on and forgot to buy milk 3 weeks in a row. She was a woman who color-coded her calendar and had a 5-year financial plan saved in a folder on her desktop. We complemented each other in the way that certain couples do. Not because we were the same, but because we covered each other's gaps. I handled the warmth and the flexibility. She handled the structure and the planning. We got married after 2 years of dating in a ceremony that her mother organized with military precision and that I showed up to with genuine joy in a speech I had written by hand on index cards. I want to tell you about the year I lost everything in the space of a single weekend and got it all back with interest over the following 11 months. Not some of it, all of it, with interest. My name is not important. You can call me Daniel. I was 38 years old, a high school history teacher for 9 years, a youth basketball coach on weekends, and the kind of man who knew every neighbor on his street by name and kept a spare key under the mat because he genuinely believed the world operated on good faith. I was wrong about that last part, but I learned it in a way that I think is worth telling. The woman at the center of this story is my ex-wife. You can call her Claire. And what Claire did to me over the course of 4 years, and what happened to her afterward, is the kind of story that people do not believe until you show them the documents. I have the documents.